Welcome to Adding Dollars. In this video, I'll be going over my weekly update on the highest volatility stocks, so stocks that are paying the highest premiums for covered calls and cash secured puts. Before jumping into this week's scan, if you're new to cash secured puts or covered calls, make sure to check out the videos in the description. Now let's go ahead and jump into this week's high volatility scan. As always, I'm in the Thinkorswim platform on the scan tab, and I'm going to go ahead and scan the S&P 500. So let me switch to that list. Click scan, and here I have a column for implied volatility sorting from the highest at the top and then going down from there. And this is one of the first times I filmed this video while the market is open, so you can see some of these numbers changing in real time. And these are the current volatility numbers as of Friday morning. So by the time this video comes out, some of this may look different. Let's go ahead and take a look at the list. At the top of the list, we have Paramount Global with 64% implied volatility, but we always look at this one, so let's go ahead and take a look at the next one. Enphase, currently trading at $129.72 with a current implied volatility of 58%. I'm going to jump over to the trade tab and see what kind of premiums we could get trading Enphase. I'm going to be looking at the 7 days out option, so options expiring next Friday. As always, I have this custom column on my platform called Percent Premium that quickly calculates the percentage profit for selling a cash secured put. So it takes into account how much premium you would get and then the risk of if you did get assigned. So this is what that column represents, and it also gives you an estimate about covered calls. If you're interested in adding this to your own platform, check out the link in the description where I have instructions on exactly how to add this to your own platform. Now let's go ahead and start by looking at cash secured puts. It looks like you could make about 1% selling the 122 strike price put options. This means you would collect about $124 in premium in 7 days, or about 1% in premium. Your risk here is if the stock did end up going below 122 at expiration and you ended up getting assigned, you would need 122 times 100 because each option contract is 100 shares. So you would need $12,200 in order to purchase the 100 shares if you did end up getting assigned. On the covered call side, you could buy 100 shares right now for $12,977, and then you could sell the $130 strike price call options and collect about $400 in 7 days, or about 3%. As always, if you do sell options closer to the current stock price, you are more likely of getting assigned. That applies for both cash secured puts as well as covered calls. Jumping back to the scan tab, we can look at a couple more. Let's go ahead and take a look at AMD or advanced micro devices. There's definitely been a lot of news about it related to AI recently, so the price has definitely been a bit more volatile and seems to be trending upward. Currently trading at $200 and has an implied volatility of about 51%. Jumping back to the trade tab, we can go ahead and look at the cash secured puts and covered calls for this one. Again, the 7 days out options. Let's let this column load a bit. And here we can see that you could make about 1.26% selling the 192.5 put options, which means you would collect about $241 per contract that you sold. The risk here is if you did end up getting assigned, you would need $19,250 in order to buy 100 shares. On the covered call side, it would currently cost about $20,038 to buy 100 shares, but then you could sell the 202.5 call options and collect about $500, or about 2.52% in 7 days. Jumping back to the scan tab, let's go ahead and look at one more. Let's take a look at American Airlines, not one that we've looked at before, and a cheaper price stock, currently trading at $15.52 with an implied volatility of about 44%. Jumping back to the trade tab, we can go ahead and look at the option chain for American Airlines. Again, 7 days out. Here, it looks like you can make about 1.17% in 7 days selling the $15 put options, which means you would collect about $17, and the risk here would be you would need $1,500 if you did end up getting assigned. On the covered call side, it would cost you $1,551 to buy 100 shares right now, but then you could sell the $16 call options and collect about $20 or about 1.31%. Feel free to pause the video and take a look at the full list of highest implied volatility stocks for the S&P 500, sorted by the highest at the top and then going down from there. And as always, if you want to help support the channel, don't forget to like and subscribe. And if you have any questions or comments, feel free to leave those down below as well. And I'll see you all in the next one.